Stocks surging with the Dow closing up 190 points just a day before millions of people head to the polls. So, panel, what is the market telling us about tomorrow?
Well, I think what we're looking at is a market, two things. First of all, I think the market's okay with a split government. And I think that's the worst case scenario. Dems win the House, GOP retains the Senate. You can't unwind the things that President Trump has put in position already, and the economic momentum should carry on. Worst case scenario, I think the market is okay with that, and I think we saw some of that today.
I'm confused what you mean by worst, but I just wanted to say that in poking fun, I want to say I agree with your assessment. Exactly. I think it will be difficult to unwind the regulatory changes, certainly impossible to unwind the tax cuts. And so I think that's why this is a relatively non-event for the market, whatever your worst case scenario means.
Yeah, I mean, I think the market is basically stabilizing after a terrible October. It's getting that out of its system and starting to look forward to next year and saying to itself, you know, maybe the economy is still on solid footing. We had really strong jobs numbers on Friday.
I think the one thing that I would add that could change is if we do have some sort of massive blue wave, which I don't think the market or political watchers are predicting at this moment. If we do see something unexpected, like a Democrat takeover of the Senate, including the House and the governorships, then I think you could see a market reaction to that, because that will definitely stymie things for the next 2 years. Certainly, that is not what the president's predicting, but what's baked in right now, I think, is a Democrat takeover of the House. By a very slim majority, and if it stays in Republican hands, then I equally don't think you'll see a reaction. But I do think you'll get one if we have some sort of big blue wave tomorrow night.
Yeah, I think that's why the market was doing okay today, because they have kind of baked in those figures. And actually, the Wall Street Journal had a piece today that for the first time since 2008, Wall Street is spending more money on Democrats than Republicans.
You know, they say the market likes to put its money where it sees winners, so that adds to this idea that Democrats are going to take the House.
Yeah, and it's not that much more money.
That's true.
Wall Street is sort of interesting. It's not my proxy for all of America. In fact, I think a lot of people out there would be surprised. Believe it or not,
that's an understatement.
Adam, I miss you. I really do, buddy.
He's back. You too, Charles. I was thinking the same thing.
But what I would say is that you also have a lot of limousine liberals down there. But John probably hit it on the head. These guys know how to hedge themselves.
That's true. That's a good point. But I mean, when you look at political spending going into 2020, what I would say will be interesting to see if this trend will continue, because you have major mainstream Democrats, senators that are running, Bernie Sanders, Elizabeth Warren, and others who have railed and really rallied against Wall Street in all of their actions. I don't think that they'll be taking money. So what I'm looking forward going into 2020 is, will there be this litmus test by Democrats running for president, all 30 or 40 of them, over who takes Wall Street money versus who doesn't?
And I still can't believe that if Democrats lose tomorrow, that is, if they don't get a majority in the House and they don't get any kind of majority in the Senate or pickups in the Senate, that Wall Street isn't going to be very happy. I think you're going to see a boom on Wall Street if that happens.
No, David, I wanted to address that. I actually disagree. I was thinking, what would happen if the Democrats took both houses? What would the reaction be? I think Wall Street has determined that we're heading into, and today notwithstanding, we're heading into a difficult period in the economy and in the market for a whole bunch of reasons. There's a whole bunch of headwinds.
Democrats are going to help that.
That's why we've had this well, they're not going to help it. They're not going to hurt it. That's my point. Wall Street is quite pessimistic right now, regardless.
Well, I'd say one other thing about the market's response, in particular today, to these midterms is we've had a lot of people in Washington telling us that this is the most important election in the history of mankind, and the fate of the republic hangs on it. I think what the market tells us today is that we hear this kind of thing every election cycle, and the market is going to move on, wake up on Wednesday and move on, whichever way it goes.
I got to tell you, though, today's session was absolutely remarkable in my mind, because it's an extension, and it began last week, of the market being able to rally without those big growth names, without Amazon, without Apple. Remember, both of them gave guidance that you could have extrapolated to mean a bad holiday season for everyone. But Wall Street, certainly the market's not showing that. Look at Burlington Coat Factory, Dollar General, Dollar Tree. Look at the brick and mortar names. Look at McDonald's. Look at Darden, the brick and mortar restaurants. I think Wall Street knows there's something interesting going on with this market, and it's probably a good thing that it doesn't hinge on the coattails of just a half a dozen names.
It's pretty simple. What's happening with the market is consumers are buying stuff, isn't it? I mean, that's the bottom line. People feel good about the economy, about their job situation. They go out and they spend their money, and the corporations make more money, and that's what's leading to the market.
But David, that should extend to iPhones, and then we wouldn't have a problem with Apple, which I know we want to discuss.
I kind of, but Adam, I mean, they're pushing the envelope, right? I think this is a company-specific story with Apple to a degree. You saw the average selling price went up 28%, but their volume is slowing. They're selling to a cult of folks, and they're not making big changes. You know better than anyone else. They might be too comfortable right now, and their stock is paying a price.
But something that we're missing in the discussion, though, wait, guys,
consumer spending
the lady is speaking. Something that we're missing in the discussion, though, about the Democrat takeover, even of the House, if it happens, or of the Senate, is the fate of USMCA NAFTA 2.0. There's no way that this Democrat House is just going to take the president's bill as it is and not want to tinker with it. So what happens if the Democrats take over the House or the Senate and say, you know what, we're not abiding by this deal? Then you have the president potentially threatening to get out of NAFTA because he can't get the Congress to approve it. So when it comes to supply chains, there still is a lot of risk as it relates to what could happen with the Democrat takeover.
Morgan, I'd say on the USMCA that this thing was built to appeal to Democrats. And
that doesn't mean they'll do it, though.
I totally agree with you. They're going to have a tough choice, no matter whether they're control the House or don't, whether they go along with this. But there's a lot of labor-friendly provisions in this deal. And, I think they did it with the idea that they were going to have to bring Democrats along.
So in other words, the deal is an incremental deal. It's not terribly important, good for headline value. And would the president really risk the shock to the economy, to global supply chains, of taking the U.S. out of NAFTA? He clearly didn't want to. That's why he settled for a mediocre deal, for an incremental deal.
Have you paid attention to the guy who's the president for the past 2 years? He'll do it.
A mediocre deal that creates more jobs in North America, more of those blue-collar jobs, more of those union jobs
more than NAFTA
that I thought unions used to love. Are you kidding me?
More than NAFTA did? I mean, NAFTA did that.
Absolutely, much more than NAFTA did. There are guarantees now for jobs in North America at certain wages, Adam. It's significantly more jobs in North America.
More government interference in the economy?
It is government interference in the economy, and let me tell you something. As purists, we always stand on the sidelines and throw darts, but none of us ever have to get elected.
Well, unless you get to zero tariffs on both sides, every trade deal is going to be government interference in the economy. I mean, just by definition, this is incrementally better. I would agree with Adam up to a point. It's not as much as we were led to believe it might be when the president first started talking about ripping up NAFTA, but it is incrementally better. It's progress.
Well, I'm just glad I started a trade fight. That's what I was hoping.
You did indeed. You did indeed.